Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 18th of November. Starting off with AFC Energy, which is rising along with other renewable stocks in the wake of the government's latest virtue signalling manoeuvres in that area. The share price breaking that line of resistance from February, that was around the 20 pence level, 21 pence level, and basically the initial target here towards 30, which should be hit relatively soon given that we've got an unfilled gap higher yesterday. Big target here over the next, let's say, 1 to 2 months, up to 50p at the top of that 1 year rising trend channel. Only back below the 200-day line, 19.89 at the moment, really delaying the upside scenario. Next up, our friends at Fincap, where it looks as though the way that I think brokers in general have had a good year starting to filter through. Here we've had a gap through the 200-day moving average at 20 pence, and at least while we're above that, looking for further pushes to the upside. Best case scenario target here probably over the next month or so would be a journey to 35 pence at the top of that broadening triangle from May, and only really back below, well below 20 pence, really delaying the upside scenario here. If you're cautious, maybe you'd wait for an end of day close at 23, 24 pence mid, which was recent, post-September resistance, but looks as though with that gap through the 200 and the 50-day moving averages, we've done enough to justify the upside scenario. Onto a stock which has been battered and bruised of late, but looks like it might just be trying to revive itself. Genedrive. Here the point of interest, I think, really is just that initial November low, 53.6 pence. We really need an end-of-day close back above that to confirm that we're bouncing off the floor of this falling trend channel from back in May, and the shares could get off the ground and maybe head back towards, I suppose, the into the 60s, which is basically the support area in July, or part of the support area in July. Obviously, the last thing we would like to see is an end-of-day close back below the existing November low, but it seems quite unlikely that that'll happen given the way that the RSI now is pretty oversold below the 30 level. On to Guild Esports, which is had a slightly tough time since it's come to market, despite the Beckham factor. What's interesting here, though, is that we've broken that resistance line there from beginning of October. That was around the 5.7 pence area, also broken the 20-day line at 5.83, which is helpful. Probably all that's missing now really is to break that neckline resistance at 6.2 pence on an end-of-day close basis. Hopefully we'll get that over the next day or two, if not today. And if we get that, then the shares could head back towards the 7.5 pence level, which was resistance for the shares on the way down. Bit of a flurry today in Hemogenics, which I think they've just announced some rather large facility. You can see that the shares have been basically hanging around on a line of support at the floor of this rather wide rising trend channel from April. Floor of the channel currently around today's support at 8 pence, and while we're above that, looking for a retest of that last spike, false dawn rally, up towards 13.5 pence over the next 2 to 4 weeks. The only thing missing, I suppose, at this stage really would be an end-of-day close back above the 50-day moving average, but it looks as though with recent support probes, and especially that low down to 8 pence just last week, the shares have done enough to build a base and are ready to head higher. On to Mossman, which I believe has had some good news today in terms of one of its wells, looking at finally breaking back above the 50-day moving average at 16 pence, and also breaking that line of resistance from September at the same level. While we're above 16 pence, looking for a top of March trend channel target as high as 0.35, which sounds rather ambitious, but after all, the base building under 0.15, I think the stock's probably done enough to prove its bullish metal. Difficult times, as I said before, for the farmers and the COVID plays and the small stocks in the space. But N4 Pharma looking more encouraging now. We've had 3 days of support building at and just below the 50-day moving average at 6.67 pence. The more closes we get above that 50-day line, the greater the chance of at least a rally towards last month's resistance at 9 pence. And even if we don't get that, looks like there's very strong support towards 5.5 to 5 3/4 anyway. So hopefully the shares will be able to pop up quite soon. If you look at that trend line there from the beginning of September, end of August, we're just breaking that and heading higher. So that is encouraging at the moment. As I said, the renewables are doing well at the moment, and I did flag Powerhouse Energy a few days ago. It looked as though it was going to break that multiple resistance at 3 pence. End of day close above that should be enough to get us or continue the journey towards a 5.5 pence target over the next 1 to 2 months, and the upside valid at least while we hold above the 50-day moving average at 2.88. So reasonable risk reward on tap there. It was great to interview Dareth Cave yesterday from Farm to Farm, and you can see that remote monitored systems managed to finally get a bounce at and just below the 20-day moving average at 2.71 pence. Hopefully we'll get a few end-of-day closes, further end-of-day closes above that level, and that becomes the support. It was sort of resistance on the way up before that sort of 2.5, 2.8 pence area. So hopefully that will come in as support, and if we can hold the 20-day line, looking for 4 to 5 pence is probably a conservative target for the stock in the near term, i.e. the next couple of weeks. Moving on to another biotech contender, and here we've got Skin Bio Therapeutics. Here we've broken a line of resistance coming in from the August peak, also broken back above the 200-day moving average at 15.88 pence, but at least while we're above that August line at 15 pence, looking for higher prices, hopefully towards post-September resistance at 20 pence initially. Big picture target, I suppose, is much greater, and that would be up towards the top of the rising trend channel I'm trying to draw at the moment, so towards the 30 pence area on a 2 to 3 month view. But let's see how we cope over the next couple of days, and if we can get a quick end-of-day close through the 50-day moving average just under 17.5 pence. Just a couple of stocks to go. Another renewable play, Velocis. I think I covered this a few days ago, which was handy, but the shares then went into a sort of a consolidation either side of the 200-day line at 5.25 rather. Current situation is that in fact we bounced off the floor of that broadening triangle from July and have been heading higher from 4.5 pence. The overall picture, though, is that the longer we remain above the 200-day line, the greater the chance of a move towards the top of that triangle at 10 pence plus, hopefully by the end of the year. Finishing off on a fun note, if that's possible in these kind of situations, Zoetic, nice consolidation here for the shares just on that broken October resistance line and just above the 20-day moving average of 39 pence. While we remain above the 20-day line, we should head relatively directly towards the top of the broadening triangle on the daily chart drawn from August. That's heading towards about 60 to 65 pence, and hopefully that's a reasonable 1 to 2 month target, hopefully even by the end of the year. If you're cautious on the stock, maybe just wait for an end of day close through that last bull trap there at 44 pence. That's it for me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.